in this video, I'm going to show you guys how you can potentially turn a $25,000 investment into $142,500 by investing into Mantle. Okay, so in this video, I'm going to show you my step-by-step take profit strategy. I'm going to briefly talk about what Mantle is, and I say briefly because I did a full fundamental analysis on Mantle on the Know It Owl's channel, so definitely give that video a watch if you haven't. Watch it before you watch this one. Don't just buy it just because I'm talking about what you can potentially turn it into. Like, actually do the research, watch the video and do your research, right? And then at the end, if you stick around, I'm also going to show you my yield farming strategy for Mantle for if I were to go about accumulating it passively, okay? So before I get started, I do have to say none of this is financial advice. These are my own perspectives, research, and opinions, and should be treated as such. So without further ado, let's jump straight into it, starting off with what is Mantle. So Mantle is a layer 2, right? And layer 2s is amongst the 4 largest narratives for currently, and I think will be this cycle. You have layer 1s, layer 2s, AI, depin, and real world assets. Well, 5, really 6 if you throw in meme coins. Meme coins have been huge. So it's one of the 6 largest narratives I think that will really lead the charge in the cycle. So Mantle is a L2. They're an Ethereum L2, and they're built to help Ethereum scale, okay? Now, what Mantle is mostly known for is they're the 3rd largest platform for liquid staking on ETH. This is where a lot of their traction came from, okay? Another thing about Mantle that we talked about in the fundamental deep dive is that they have the 2nd largest treasury in all of crypto, right behind Uniswap. Right now, their treasury is $2.2 billion. Still very significant, okay? I'm not gonna break down what an L2 is super in depth because, like I said, I covered it in the fundamental analysis, but it's basically made to free up block space on Ethereum, the layer 1, right? Any blockchain is in the business of selling blocks. There's only so much data, so many transactions that can fit inside of a block, as it's only so much space. So the more transactions there are, the more clogged it gets, the higher the gas fees are. L2s is meant to take some of those transactions so they can process on the L2, roll them up, and submit them to the L1 so they still have the security benefits, right? And I made a full video on the L2s on buying the cycle, and I am adding Mantle to it after doing my research. I am buying Mantle, just being frank, okay? And it's easy to bridge over to Mantle as well. You can go over to the Stargate bridge some ETH, bridge some stable coins, and it works fast. It's kind of just like using Arbitrum, right? Or Polygon. So it works fast. They have a huge treasury, part of the L2 narrative. And I think that once ETH rises in price, it's going to bring up liquid stake derivatives with it, which, I made a video on how to get the Cook token airdrops, a guaranteed airdrop. By the time you watch this video, I'm not sure if it'll be too late or not, but their Mantle ETH or METH is the only LSD without a token. Well, unless they have one by the time you watch this video, okay? So Mantle is doing a lot of cool things. They have a lot of money. So I like it. Now, let's go over my step-by-step strategy on how to turn 25K into $142,500. All right, so here is my Mantle take profit plan, okay? Now, when you're coming up with your take profit strategy, you want to have an estimate as to what do you think the price can reach conservatively and aggressively, and set up your strategy in a way to where even if it doesn't hit the conservative or if it exceeds your aggressive estimate, you're still able to take some good profits off the table, okay? So at the time of recording this video, Mantle is 57 cents, has a current FDV, which is fully diluted valuation, of 3.6 billion with a B. And if you don't know what FDV is, it basically takes into account all of the tokens that will ever exist, okay? Now, I'm not gonna dive super deep into the tokenomics because we talked about that on the fundamental analysis, but it's a better gauge than market cap because market cap is circulating supply times price, and with the token unlocks, the market cap can increase while the price of the token stays the same, okay? So my conservative estimate on where the FDV can reach is 20 billion, and on an aggressive estimate I think it can reach 30. And I say that because, like I said, this is our first bull market where we're going to have institutions involved in this capacity. So just because they may not be worth that much, that doesn't mean they can hit it. So keep that in mind. In the short term, the market's a voting machine. In the long term, it's a weighing machine. A lot of times in the bull market, things are overvalued, and you can make money off of these overvaluations, okay? So starting off with 25K, my first take profit is going to be when it does a 3X. That will bring the price from 57 cents to $1.71. And that'll bring the FDV from 3.6 billion to $10,806,273,039. That'll turn my 25K into 75K. At that point, I'm taking off 25K in profits. Okay, so I have 50K left. My second take profit is going to be once it does a 2x, right? That's going to bring the price from $1.71 to $3.42. That's going to bring the FDV from 10.8 billion to $21,612,546,078. So now my 50K is going to be worth 100K, and now I'm taking off 100K in profits. All right. So I have 75K in profits so far. Now I still have 50K left in my investment. So at this point, we're $1 billion above in terms of FDV, above my conservative estimate at 20 billion. So you notice my profit taking got much more aggressive. I took off 25K here and 50K here because we're getting closer to the top, right? The more it goes up, the higher chance it is that it can go down statistically. So now I have 50K left still. My third take profit is going to be when it goes up 35%. That'll bring the price from $3.42 to $4.61, and that'll bring the FDV from 21.6 billion to $29,176,937,205. And I did it at that level, 35%, because it's under my aggressive estimate at 30 billion, right? And guys, remember, I know this sounds like a lot for the FDV, but the market cap is going to be significantly smaller. So if the market cap is 30 billion, I have to look at Mantle, but if the FDV is 30 billion, the market cap will probably be 15, 20 billion or something like that, which is not too crazy, especially for a bull market. So my 50K will be worth 67,500. At that point, I'm taking off 50K in profits, and I still have $17,500 left. Boom. You just turned 25K into $142,500. So you're probably wondering, well, what do I do with the 17,500 that I still have in there? Well, at this point, I'm going to be taking off 50% every time there's a 25% gain. This is kind of allowing me to dollar cost average out of the market, because I know when we get to this point, or at least I think, things will probably start to come down. All right, so for those of you who stuck around, let me show you my yield farming strategy to show you how I would go about accumulating Mantle passively. So first, I'm gonna come here and check my Yield Hunter tool. And guys, if you want to get access to this tool, it is $1,000 annually, or it comes with our premium package here at Know It Owls. And our premium package, you get a free hour strategy session where we'll ask you a bunch of questions, see what your goals are, what kind of investor you are, and help you come up with a plan to reach those goals and how to manage your pools. You get access to our 13-hour course. You get access to our professional coaches who do this for a living, and you get access to our communities where we host calls on a weekly or bi-weekly basis, giving out alpha price predictions. They get access to things I don't put out here on YouTube, et cetera, et cetera. It's just a really good DeFi community. That sounds like it's up your alley. Click the link in the description, book a free strategy session. You'll talk to me or one of our coaches, see if our program is a good fit for you. If not, we're still happy to answer all of your questions, okay? I digress, and this isn't the only tool that we have, by the way. We just launched another one, and I think it's the best tracking tool in DeFi. Anyway, I go on here and I click Mantle, and you can see that the APR is only 2%, and the FTV, or the volume to TVL ratio, is 0.02%, which is pretty shitty, TBH, right? So it's not worth it to enter into this pool. It's many pools that I'm in that's paying way more than this. So, and if I go to CoinGecko, you can see that this is a top pair for a DEX. 0.05% of all of the trading for Mantle is happening on Uniswap v3 on Ethereum. So what I would do is just provide liquidity for another pool, like my Maple ETH or Goldfinch ETH or ETHUSDC or one of the other pools that I'm in, and I will use the rewards to accumulate Mantle and just buy it, because by getting in this pool, I'm just kind of wasting time and money. So with that, I'd like to conclude this video. Guys, if you got value, I ask you to drop a like, drop a comment, share with a friend. Let me know what take profit strategy you want me to cover next, what fundamental analysis video you want us to do next. We're getting back into doing these more. Other than that, I thank you guys so much for tuning in. I love every single one of you watching, and I'll see you in the next video. Take care and trade safe.